Good afternoon, everyone. Thank you very much for your time and welcome to the SAP Enterprise Performance Management Overview webinar. Without further ado, I would like us to see what we are going to cover in the session today. So we are going to see what the webinar is going to show, what attendees it is expecting to have, a little bit of more information. Then we'll move on to the overview of EPM and the components that are combined within this suite. And then we'll pick 3 of these and we'll focus on them in greater detail. So disclosure management, PCM, and business planning and consolidation. After I have talked to you through the key features and the timelines and the benefits of each of these 3 solutions, we will explore some examples. And then at the end, towards the end of the session, we'll have some Q&A. So as we go along, if you have any questions, could you please ask them via the chat, and then I will review your questions at the end of the session. So this webinar, it is aimed for key finance stakeholders, business users, consultants who work in the SAP world, existing EPM clients, potential new clients that might be interested in the EPM and what it has to offer, and any general interest in SAP EPM. The aim of the webinar will be to provide information on what EPM is, what are the use cases for EPM, and what are the components that form EPM. Also, you will be able to establish whether EPM is something that your organization or organizations can benefit, and how your business and operations can be more efficient, as well as making strategic decisions for the future, and also how each component came about historically and how they all fit together. So let me introduce myself. My name is Milena Ponova. I'm a senior EPM consultant working for IBsolution Bulgaria. You can see that there is some more information on my background, but I specialize primarily in PCM, BPC, and disclosure management. So the big question of today is, what is EPM? Well, I'm sure that all of you attending have heard it, some of you in greater detail, others it's first time coming across this buzzword. So let's see. So EPM is an SAP suite which is part of the business analytics family, and it focuses on how enterprises are managed. So what it can do is it can help you to create your KPIs, but also monitor them and change them on demand to fit with your strategic goals. You can also measure via very mature and sophisticated tools within EPM your performance and see how these KPIs need to be adjusted going forward. It also provides this capability of, for compliance with financial reporting standards. For those of you who haven't heard this term, it is like Microsoft on steroids, they say, because you will see in the subsequent slides what we mean by that. It's very user-friendly, but it's also helpful for your organization, and it gives you capabilities well over and above Microsoft Office. You can analyze your performance and act upon it now rather than when it is too late to change things and they have already happened. And another beauty of EPM is that it really can give you a drill down to the very low level of information, so you can really make precise decisions and planning. So let's explore in greater detail what we have here. So we are seeing at the moment the three components that I'm going to discuss in greater detail, as well as others which will be interesting to mention. You can see that in here we have EPM and EIM. It's because EPM stands for Enterprise Performance Management and EIM is Enterprise Information Management, and they complement each other. So the components you see on screen belong to both groups. So let's have a look at BFC. So BFC, it stands for financial consolidation. So it's a tool within the EPM suite which provides you with the capability of fast-track close and disclose of your financial reports and annual reports. It automates the consolidation, which means time efficiency. It can operate with multiple currencies. It takes into consideration mergers and acquisitions, and also is compliant with the worldwide known standards like IFRS, GAAP, etc. The next one on screen is FIM. This is financial information management. So before you get to your reports and your analysis, you need to be able to have clean data. So FIM provides you a very user-friendly way to maintain your data, your master data. So you can avoid duplicates, you can maintain the mappings between multiple data sources and centralize all your data ready for it to be fed into the reporting tools, or in other words, the EPM tools. Another one is intercompany reconciliation. This focuses in particular on the intercompany balances, and even though it is very, very detailed, it can be very useful to complement BPC and BFC. So it's again doing the most of the work in a dedicated tool for intercompany reconciliations and fixes, and then you are ready for your last mile reporting and analysis. We also have financial notes management. So this solution, it manages the note in particular for a financial statements. As you can see here, we have listed some of the benefits. So as you can see, it's always time, because it's busy times when you have to close the books, publish your results if you are listed on the stock exchange, etc. You want to have consistent data, and you want to be compliant with the auditors, because they will always be the ones that will come and do the checks. And if you have a tool in place that can bring you much closer to efficient audit report, you would be interested in that. Information steward. This is another one which falls more within the EIM family, like FIM itself. So again, it's a tool which helps you to maintain your master data and metadata, and you can analyze the master data from different sources and enhance the governance initiatives within your organization. So the next one which we have here is business objects data services. This is not so much available and usable for finance and business users, but it's basically the prerequisite for FIM. So you can have data services in place again for the quality of your data and integration of data, and then on top usually you would see FIM sits to provide a more user-friendly interface. As you can see, the bottom three are in different color, and this is because we were going to explore them now in greater detail. So, SAP Disclosure Management is the first one that I'm going to show you. So, what is DM? Well, DM provides many things for the organizations, the main one of which is it's the last mile of financial reporting. So it is the top layer when you have closed the books, when you have reconciled, you have done all your journal entries, and you're ready for a final review and publish. So when you publish the financial statements, this is usually the case when you're listed on a stock exchange, and you need to make sure that everything is in the proper format. Any last changes are incorporated, etc., and you're ready for publishing. DM has this capability of putting all your information from start to end and ready for publishing. It is also compliant with the International Financial Reporting Standards. You have pre-built embedded templates for most of the financial reporting standards. If you have national specific requirements, then this can be easily configured because it's quite a user-friendly tool. Another thing which is very important for organizations when it comes to their sensitive financial data, upon preparation for closure, you want to have a very sophisticated audit trail and to be able to track and see every change. This is what DM gives you. It also has an approval process which puts things into perspective in a workflow which you follow step by step, and you can customize it based on your demands. And it's also giving this extra mile of reporting in the sense of tax submissions. But let's see in greater detail. So before we dig in, I would like to put things into perspective for you. So disclosure management was originally developed by a company called Consolidation, and the company was established in 2000. So what happened over the years, Consolidation developed quite a few different solutions to fulfill different needs across the business, and one of them was disclosure management. So SAP in 2010 acquired two of the offerings that Consolidation had, disclosure management and notes management. As the time went by, Consolidation evolved more on the options that they were offering apart from DM and notes management, and PwC became interested and purchased Consolidation. So Consolidation no longer exists, but disclosure management and notes management are within the SAP world. So let's dig in under the hood. That's what we see as the disclosure management landscape. So what you see on the left is all the possible data sources, so where you can source your data from. As you can see, we have SAP data sources, but we also have non-SAP data sources. So this gives the flexibility, even if you are not an SAP customer or you don't necessarily have necessary connections, you can still load your data into disclosure management from other sources. Probably it looks quite odd on the left-hand side at the bottom that you see disclosure management within disclosure management. Well, this basically means that you can make the data, once you load it, become part of your disclosure management server. A perfect example here would be BPC or business planning consolidation. Excel file is, you can load your data from flat file, XML files, another form of data entry. And once you have uploaded all your information, which can come from even all of these data sources, it then becomes available in disclosure management. So what happens there is you have two main sections. So the data repository is where all your data coming from your data sources stand. The document management is where you connect this data with your predefined templates. So your balance sheet, your income statement, and your notes for your accounts. Once you are happy with all your reports, you have gone through all the checks, the accounts are approved, etc. You have one great button which is called Publish, which outputs every single thing that you have in disclosure management in one file. So this is easy for distribution. This is easy for publishing purposes and also for archiving purposes. The possible outputs, as you can see on the right-hand side, you can do outputs in Word, in Excel, in PowerPoint, so it is fully Microsoft Office compatible. You can also have PDF output and as well as HTML, iXBRL, and XBRL. Not sure at this point whether you wonder what the last two options are, but let's continue further on. So what are the key features of DM? So let's put things into perspective as to why you would, clients would need DM. It's quite user-friendly because it has Microsoft Office and it's very intuitive tool to use. When it comes to the end of the financial close, if you want to make a last-minute change, you can refresh the whole report, which can be up to 200 pages. It will update automatically, so you won't need to do all the cross-checking and referencing. XBRL and iXBRL. So XBRL basically is the extensible business reporting language, which is used worldwide by different tax authorities, and its purpose is for tax submissions. iXBRL is something that is fairly new and it's not available for all the tax submissions. Currently, it is available for Japan, Denmark, United Kingdom, and US SEC announced that it will be available for their filings as well. So again, under one hat, you have multiple things that you can do with disclosure management. As I mentioned already, you have a very sophisticated audit trail with date stamps, user that have done the change, etc. You have the workflow which everyone has to follow as part of the process, which you can keep over the years or enhance further. You can design your own corporate layout so that your accounts are already in the format that you want them to be. It is connected to multiple data sources. It has an authorization structure, and based on this authorization structure, you can switch on email notification to make the whole process more interactive. For those of you who are involved with financial statements, you would know the pain of roundings. Disclosure management has an add-in which deals with rounding errors and applies control checks to make sure that your numbers are correct across all statements and notes. So what are the components of DM? It has a web portal, and this is how it looks like with various tabs and functionalities that you have in there. It has add-in for Word, for Excel, and for PowerPoint. And you can see on the screen some of the components included there. And the final thing that we have is a specific add-in for iXBRL submissions and tagging. So as you can see, very user-friendly. Those of you who work on a daily basis with Excel, it's very easy to pick up and use. What are the benefits? Why would companies use disclosure management instead of produce their reports in any other way or the old-fashioned way? Well, it is an automated process, so there is a lot of time saving on accounts preparation, and we have seen that from a month's time or even more, the time to produce the accounts reduces significantly. You have control checks in place. There is a reduction in the risk and cost for the regulatory filings, because since it is an automated solution, it eliminates the possibility for human error. It has a workflow and approval process, which we mentioned already. It can accommodate last-minute changes easily. It is flexible user interface, and you can design your reports as you like. Rounding is not an issue because you have a tool in place. You can also do a roll forward, which is the functionality within DM, which saves a lot of time for when next year comes and you have to prepare your statements again. Compliance with financial reporting and regulatory standards. You have a greater level of control because of the sophisticated audit trail. The time to produce the accounts is significantly reduced. You have full visibility of all the revisions that you made, and you can check line by line what's the difference between versions. And the beauty of it is as well that you have all the data you require in one place. Right, so this was an overview of DM. Let's proceed on to the next one. So PCM, Profitability and Cost Management. This is an SAP solution which is based on activity-based costing. It provides true profitability to companies. It helps them to reduce their costs. It is real-time information. You can also eliminate the gap between net profit and gross profit, because a lot of companies don't know this information in detail, where the costs come from and what causes them. You can establish bottleneck resources as well. So ALG is a company that was established in the 1990s, and this is the company within which profitability and cost management started its journey. This company was purchased by Business Objects in 2006, who in their own turn improved further the solutions that they purchased from ALG. And then in 2008, SAP purchased PCM, and it has been part of their EPM suite ever since then. What are the key features of PCM? Well, it is enabling you to really see the low level of your information and data, and because it gives you that the management accountants can make much more detailed and informed analysis on the performance of the company. You can see the costs per activity, so you can imagine how detailed this is. It's real-time data, and because of that, it can help the strategy of your company, because you can make the decision now and not when it's too late. You can also do what-if scenarios with the information, so you can change your strategy and approach if not as profitable as you want it to be. It is very mature product because you saw the development over the timeline. So there aren't that many enhancements that are happening within PCM apart from performance improvements, because it is so mature and efficient in its own right. You can export results to HANA, but you can also place PCM on HANA. It also can deal with very sophisticated calculations, and the beauty of it is that the calculation model comes with PCM. So based on the complexity of your business, you can use the out-of-the-box functionality, but also you can add additional rules and calculations to fit the demand of your organization. PCM also can offer different models. So profitability is the main one and it's most commonly used, but there are other two branches in the tree. One of them is transactional costing, so this is digging even lower at the lowest level of detail and information, and bill of materials. SAP has various components which come with PCM itself. So model builder is the main one where all the magic happens, where you design your rules, you administer your costs, and input your data, both transactional and master. It has its own tool for data import and transformation, and what we mean here is in the form of CSVs. You can also import XMLs, or you can do automated connections with other data sources. To add on to that, it has the book viewer, which is for reporting purposes. Usually, that's what clients use it for, unless they want to use the EPM add-in, which you can see at the bottom of the screen. It has EPM add-ins, so all the three things I'm showing you today, they all have add-ins for Excel one way or another. And you also can create in the sense batch jobs via the PCM console to enable you to automate processes within PCM like data load and data extraction, etc. There are other components, as you can see on the screenshot. They're not so frequently used, and they can be explored in greater detail when we get to a PCM webinar, for example. So I would like to focus on the profitability because, as I mentioned, this is the main component that is most frequently used. So ABC, what's the principle behind it? Well, we have two ways to allocate our costs. So one way is we have our line items, and via the resource drivers, we reach activities, and these activities have behind them the drivers for these particular activities or many activities. So once we apply the activity driver as well, then we can reach our output, or in other words, the costs for a particular activity. Once we know our costs, then we can take this information, and again within PCM, we can analyze our revenue and how this can be impacted. The other option is directly from line items via activity drivers, because you might not be clear on all the activities that you have as a business in a particular branch or a particular location, and you just have more high-level information until you get the detailed one. So let me show you PCM Cockpit. I already mentioned that because it's a mature product, you won't expect to see it looking as fancy as the others, but it works perfectly fine, and the majority of investment is made in the fact that it has EPM add-in and to optimize the performance. So what we see here is every PCM model has the core dimensions, which are always there. Then you have the rest of the components, which are totally tailored by your business requirements. So the line items, in this case, I'll give you an example, is our staff costs. So we are a company, and our staff costs are the line items. Our activity is selling products or materials to customers. The driver for this selling is the time, because we want to sell as many products and materials as we can in a particular point of time. Then once this is done, we can once we have taken into consideration these factors, we can establish our the cost of sale by channel and by product. So our product in Europe, then within Europe, how much does it cost to produce it and sell it within a particular country or city. PCM, you can do as much as drill down as you can. And also another thing which we need to consider, as per my previous diagram, our activity is selling products and materials. The driver for them is the number of sales that we have made. So I wanted to show you this, and hopefully it puts things into perspective, and now you have had a sneak peek of how a PCM main cockpit looks like. As with disclosure management, let's explore what are PCM's benefits. Well, it helps you to manage shared service costing, product, customer and channels, costs and profitability. Everything is within one place, and you can decide whether you want to discontinue a product, or a particular customer doesn't provide enough profit, or you need to stop selling your products or materials in a particular location or via a particular channel, for instance, internet marketing and selling. It also helps you manage pricing because it has sophisticated embedded calculations where you can see the unit price for a particular activity, and you can easily change this to reflect your strategy. It is also an application which gives you information on demand, which is very useful when you need to act quickly. You can also align the resources that you have with the business demand, and it will be a very easy and clear message once you have performed the calculations with all the information and components that you have. It is driver-based planning and forecasting, because here you don't only calculate actuals, but you can also do some forecasting on your costs and anticipate the levels of profitability now. It reveals inefficient business operations and bottlenecks. It can also establish in detail the resources which are not directly attributable to outputs. And in this way, you can be even more detailed and comprehensive in your management information. You can also quantify the cost of non-value added activities, and in this way, once you establish them, you can eliminate them or see how you can change you can change the current situation. You identify what is profitable and what is costing you too much, and then you can act upon it. And you can track your revenue and contribution per activity and per product, channel, customer, anything. So they all fit together, and now we are moving on to the final component that we'll discuss today as part of this webinar. It's business planning and consolidation, or BPC. BPC, it is the tool to go to for forecast and planning. Also for consolidation. So if you're a multinational organization with multiple associates and subsidiaries worldwide, you would want to have a centralized system where you can combine all the information. You can do planning, and you can remove the flexible planning processes, because if you establish one process for the mother company, then the subsidiaries and associates can use similar process, so you arrive at a greater consistency in the process. You have a greater control because all of the information in terms of forecasting, planning, and actuals is within one system. And it's also compliant with the regulatory requirements. Timeline, like with all the others, so there was a company called Cartesis, and also BPC had an old name. So Cartesis did develop BFC and other planning and consolidation capabilities. Then they were purchased by Business Objects, and within Business Objects, this is where BPC was developed and given the name of BPC. And as you already know, because we saw this on a previous timeline, Business Objects was purchased by SAP, and since then SAP have been investing quite a lot in BPC solution, and has many clients over different industries worldwide. So what are the key features of BPC? Well, as I mentioned, it is enterprise-wide solution. It can give you a complex analysis of your data per cost center or per location, and you can plan and act upon it. Consolidation, it is very useful and efficient because it has pre-set functionalities and features to aid your consolidation process. Once implemented for all locations, you have a centralized system where all the information is fed, and then you can do the data cleansing and have a much more reliable financial information. It has pre-built business rules. So, for instance, your mapping of your accounts between the P&L and balance sheet and cash flow is something that you can use available in BPC. You also have these business process flows which put everything into order, into place, and you can assign users and user groups to perform a specific part of this flow. You have a feature for journal entries, which is something that companies that work on their consolidation always come across. And it is also a very secure tool because you can design really complex but also simple, again, based on your requirements, security matrix to serve your purposes. Because at the end of the day, what is within BPC, it's always confidential information, and certain user groups have access to only certain part of the information. Components of BPC, quite similar to disclosure management. We have a web portal where the business process flow is displayed, where you can administer and configure the components, the hierarchy and the dimension of your BPC model. You can maintain documents there as well and check your activities. You also have EPM add-in for BPC, and it has two tabs within Microsoft Excel, as we see on the screen. One is for master data management, so it is more an automated way to load data, extract data, or to perform particular calculation on demand. And the other tab, or the other aspect, is the reports and the inputs schedule. So within EPM, you can design all your reports, and even if some data is subject to change, you can change it even manually within these input schedules, and the data will be saved on the server, and it will be refreshed and updated. So I already started talking about benefits, but let's look into the benefits. So flexible reporting, because it's very easy to create a report in BPC. It's very intuitive and natural once you have had very, very small training. Another beauty of BPC is that you can keep multiple versions, but you can apply a lockdown on the version or a particular snapshot. So it stays there as historic information, but it cannot be changed after the particular deadlines come. Because of the fact that all the data is centralized, it's already available and ready for you. All the checks have been made, and you can close much faster your month end or your year end. Because of that, your time to produce your statements and your reports, it's much smaller. And this means that the key business users have more time to spend on strategic decision making. Also, we said that there are out-of-the-box calculations, but over and above, you can still use the Excel formulas if you want to and if you need to, because your report is in an Excel interface. So you can do a combination of BPC and Excel functionalities. You also have a better accuracy in your planning and forecasting with BPC. You can tailor-make your security setup. You can use a standard approach, or you can design your own decision tree on security. And you have one version of the truth. So, EPM examples. Probably we want to look into the questions first, and then I can, if we have time, I can show you the examples, because probably some of your questions will be based on examples. So let me have a look into the chat. I don't see any questions. Does anyone have any questions that they want to share in the chat? No questions. Okay. Well, in that case, let me go back to the examples. So let's have a look here. So a particular company within the oil and gas industry managed to achieve a better ad hoc analysis to the operations and staff management. A retail company benefited from consolidating the data from different sources, was provided with one view of the truth, and they were able to make better decisions for the future, for their forecasts, and for their associates and subsidiaries. And probably it is obvious, apologies about that, probably it is obvious that this is BPC. If we move on to the next example, it is within the banking industry. So what this particular client achieved is report comparison and versioning, because they wanted to be able to see every single change that was made on a particular report, and when the change happened and who made this change. So they wanted to have a tighter control, which also the auditors were going to be quite happy about. The other example is a technology company. What they benefited from is they managed to accelerate the the generation of their reports, and it was for their quarterly, monthly, and annual reports. And because of that, they managed to reduce the cost, because the resource dedicated before for report production managed to focus on something else. And this is SAP Disclosure Management. Telecommunications company, so what they managed to do is reduce the operation costs. They established a bottleneck resource. They also saw which stuff they need and which could be moved and shifted to other departments and operations within the company to make efficiency in place. And we have goods company for production. This is where we can see that they managed to enhance their environmental value and reputation. They gained a competitive advantage in comparison with their competitors, and they made savings while they have increased their sales. So you will be able to see this webinar uploaded on the Academy website and the materials, as well as many other useful information for the SAP world. Let me just check if there are any questions. I don't think this so. So I would like to thank you for your time and for joining this session. I hope it was helpful, knowledgeable, and interesting for all of you participants. Thank you for your time and have a good day. Goodbye.